Welcome to today's episode, where we dive deep into the question, is the Iraqi dinar investment a scam? This topic has gained popularity recently, and today we'll unpack everything you need to know. The basics of the Iraqi dinar investment. The Iraqi dinar investment scheme is centered around the idea of purchasing the Iraqi dinar at its current low value, with the expectation that its value will dramatically increase as Iraq stabilizes and grows economically. Investors are enticed by promises of substantial profits with minimal risk, based on the potential for future revaluation of the currency. Typically, these investments are marketed to veterans, civilians, and inexperienced investors who might not fully grasp the complexities of currency investments. The core of the scam lies in convincing investors that buying Iraqi dinars is a shortcut to wealth, as the dinars are currently valued at about 1,000 Iraqi dinar to 1 USD. And the scammers claim these rates are bound to increase, leading to lucrative returns when exchanged back to dollars in the future. The history of the dinar and red flags. The history of the Iraqi dinar investment scheme is rich with red flags that potential investors should heed. Originating from a legitimate notion that currency value can increase with national stability and economic growth, the dinar investment pitches have been skewed to present a highly unlikely scenario as an almost certain future. These pitches often reference historical events like the increase in value of the Kuwaiti dinar following the Gulf War, suggesting that the Iraqi dinar could similarly appreciate post-conflict and reconstruction. However, these comparisons are misleading. The Iraqi economy and its currency dynamics are vastly different from those of Kuwait post-war. Iraq continues to face significant political instability, corruption, and ongoing conflict, factors that severely impede economic development and currency valuation. Furthermore, unlike Kuwait, Iraq has a much more diversified and not as quickly recoverable economic structure, heavily reliant on oil exports, with revenues that fluctuate with global oil prices. The use of historical examples in marketing the dinar also glosses over important details. Neither the Kuwaiti dinar nor other currencies cited as examples were free-floating during their appreciation, meaning their increased values were largely due to state policy and not market dynamics. This misrepresentation is designed to create false hope and lure in investors who are not aware of the intricacies of currency valuation and economic recovery. Thus, the historical context, when examined closely, signals more caution than encouragement for potential investors. Legal concerns and misleading marketing. A critical aspect of the Iraqi dinar scam involves the legal and regulatory maneuvers used to sell these investments. Many dinar dealers operate in a gray area by registering as money service businesses, MSBs, with the U.S. Treasury. This gives them a veneer of legitimacy and regulatory oversight, but is misleading because MSBs are not authorized to market investments. The essential registration required to legally sell securities is bypassed under the guise of selling the dinar as a collector's item or through other legal loopholes. This lack of proper registration and the deceptive nature of the sales tactics should alert potential investors to the questionable legality and integrity of the offering. The illusion of profit. Liquidity issues. One of the most significant problems with the Iraqi dinar investment is its liquidity, or rather, the lack thereof. Investors might find it easy to purchase dinars, but selling them can be a different story entirely. The market for the Iraqi dinar is extremely illiquid, meaning there aren't many buyers when you decide to sell. This situation is exacerbated by the wide spread between the buying and selling prices, often around 20%. This gap means that the dinar would need to appreciate by at least 20% just for investors to break even, ignoring any additional transaction or holding costs. This lack of liquidity poses a severe risk to any investment return and can trap investors' funds in a virtually unusable form. The risks of currency redenomination. Currency redenomination is a typical response by countries with severely devalued currencies to simplify transactions and stabilize the economy. However, for investors holding the old currency, this can translate to substantial losses. When a country decides to redenominate its currency, old units are exchanged for new ones at a set rate, which may not be favorable. For example, the process could involve exchanging thousands of old dinars for a single new one, effectively erasing much of the currency's previous nominal value. Additionally, if this exchange has to be done in the country of origin, it could mean significant logistical challenges and costs for foreign investors. This adds a layer of complexity and risk that further diminishes the attractiveness of investing in the Iraqi dinar. Economic stability and inflation in Iraq. Investing in the Iraqi dinar is significantly influenced by Iraq's economic stability, which currently shows signs of volatility and unpredictability. The country faces numerous challenges, including political instability, security issues, and dependence on oil revenues, which fluctuate with global oil prices. Additionally, the Iraqi central bank reports inflation rates that vary significantly, ranging from negative to as high as 8% in some months. Such inflation variability can rapidly erode the value of the currency, further increasing the risk for investors. The economic conditions in Iraq suggest that the potential for a stable and steadily appreciating currency is currently low, which should be a critical consideration for any potential investor in the dinar. The potential for hyperinflation and its effects. Hyperinflation is a devastating economic condition where inflation rates escalate beyond control, drastically diminishing the currency's purchasing power. For dinar investors, the risk of hyperinflation in Iraq is a serious concern. In nations where hyperinflation has occurred, such as Zimbabwe and Venezuela, the value of the currency has plummeted, making the local currency nearly worthless. If Iraq were to experience similar hyperinflation, any investment in the dinar would likely lead to significant financial losses. The historical examples of hyperinflation underscore the fact that growing economies can sometimes lead to a weakening currency, contrary to what dinar dealers suggest about the prospects of economic growth strengthening the dinar. This risk of hyperinflation adds another layer of uncertainty to the investment, making it even less attractive from a financial standpoint. Government policy on currency appreciation. A significant factor that potential investors must consider is the likelihood of the Iraqi government pursuing policies that would appreciate the dinar. Generally, a government facing extensive national debt and economic rebuilding as Iraq does might find a strong currency disadvantageous. An appreciated currency can make exports more expensive and reduce competitive pricing on the international market, besides increasing the real burden of repaying any dollar-denominated debts. What do you think about the Iraqi dinar investment? Have you or someone you know considered investing in it? Share your thoughts and experiences in the comments below. Don't forget to like, subscribe, and hit the bell icon to stay updated with more insightful content like this. Thank you for watching, and remember to always do your research before making any investment decisions. Stay safe and informed.